Hello, everyone. Welcome. Today we have another live streaming for the PCE numbers, of course. Let me just. Okay, here we are. Perfect. Another live stream is, as I was saying, for the personal consumption expenditure, basically the personal spending in the US. One of the favorite Fed data, like even higher than inflation, as I keep saying. That's what the Federal Reserve, is watching for taking any final decisions regarding the policy, the rates as well, and in general the fiscal policy and monetary policy as well. So we obviously we're gonna start with the gold as usual, but because we have plenty of time, we have 20 minutes to go until the data are out. I would like firstly to go through the stocks, which we have seen very similar to the commodity link assets. We have seen a sharp dip. This is Nasdaq, guys. I'm gonna share also. Let me just having the here. I think you can hear me better right now. So, as I was saying, we gonna start with the stocks, okay? And I'm gonna also share what I'm actually sharing right now. Yeah, I'm gonna put that as a like on the bottom, a ticker for what you're seeing, because I think it's not visible. So, as I was saying, stocks have seen a significant drift. This is the daily chart in Nasdaq. 1, 2, 3, choppy, fourth day in a row to the downside, fifth today, steady a bit. So if I zoom into the 1 hour chart, you're gonna see that ahead of the data, since the Asia Open, we have seen a sideways move. It's Friday, is end of the month, and this is actually something that happens quite often, especially due to the end of the month. Okay, so um, uh, it's a repositioning of the market, is concerns, is the data as well. So a lot of sideways movement after this sell-off that we have seen the whole week mainly. So it's PCE. So let me just analyze a bit what is expected today. As I mentioned, we have seen the US stock markets sideways, as you can see over here right now, sideways so far today. That's actually on the anticipation, but in general, okay, in general, guys, let me check. Let me show you also the S&P 500 other than the Nasdaq over here. In general, we have seen that there was a very slight support in US stocks, still just a bit, okay, just a bit. So yeah, so just a tick higher, but nothing really significant, as I was saying. So what is expected today? Basically, every single piece of data is important, especially the Fed preferred inflation measure, as I mentioned earlier. So today, guys, okay, if we consider what we have seen so far from the US data, which was a bit like we have seen some slowdowns, but the attention today is whether we're gonna see a reading that will basically spark more concerns to the market participants, whether we're gonna see something that it will shift the sentiment further to the bearish scenario. What that means, it's very important to see whether the data today will allow the Fed to proceed with rate cuts even though the rate cuts have been shifted and postponed for later, but it's very, very important to see whether they will we're gonna bring, let's say, rate cuts back closer to the closer. I mean, from a data perspective, I mean, currently the rate cuts are expected in summer. So this is the big concern. It will be another signal that there hasn't been much progress on US since June 2024. This is what we're expecting to see. Was it enough to slow down the inflation? I mean, any action that the Fed has done or not? This is what we're expecting to see. So largely in focus, of course, especially with after the tariffs from Mr. Trump. I think you have seen all over the news regarding the 25% tariffs in Canada, Mexico, the extra tariffs in the tariffs in EU as well. So this is not an environment for de-risking. Okay, this is a risky environment. It's not. It seems that we're not gonna count down anytime soon. Okay, this is what I'm trying to say. So this is S&P 500. I should change the caption. By the way, this is your session, as I keep saying, so feel free to ask anything you want. I can see your comments and I can reply live. This is the S&P 500 sideways. I'm going to quickly shift to the gold below, because I know that it's everyone's favorite one. We have seen significant profit-taking conditions from the market participants in general this week. Okay, so if I zoom into the 4-hour chart, actually I have it over here in my Heiken Ashi. Here it is, 4-hour chart. I think I showed something like that in my live streaming yesterday, but also the last week, if I'm not mistaken, or I have definitely put it on my articles. So we had an ascending triangle broken on Monday. Was Tuesday. Where was it? 24th. When was that? Yeah, on Monday, actually broken on Monday. I measured the distance. I measured the base of the triangle just to see the next support level, the next immediate support level, and that lies down to 28.30. As you can see, this is a 4-hour chart. Sorry, gold 4-hour chart. As you can see, remains on the downside. Bollinger Bands signal further bearish move. MACD the same. So 28.30 is the next support level based on the measurement that I have done on the base of the triangle. And also, if I go higher into the daily time frame, if I'm not mistaken, let me double check for you. Actually, yeah, okay. So based on the Heiken Ashis, the next two support levels that I have in play, basically 28.30 is based in the next immediate support level based on the base triangle, but also slightly above the 38.2 Fibonacci level. 27.90, 27.80 is twice, is this double Bollinger, double fractals. So double fractals, yes, latest swing highs, but also the 27.30, let me zoom in, it's this double top over here. So if I measure this distance, you can see, sorry, my bad. If I measure this distance, you're gonna see that it coincides with the 60% reversal. 60% reversal. So three very, very important support levels in the medium and long term. Medium term mainly. Okay, 28.30, 2800s, or even 27.90. And the third one is 27.30. Let me zoom in for you to see precisely what I'm talking about. So far today, because I know that you just thinking what's the next step once the data are out. So this is the 30 minutes chart. Okay, euro dollar or okay, noted. So 30 minutes chart on gold. Okay, even though there was some sideways movement with Bollingers below the price, providing some support. However, look at that. So MACD remains well below zero, so negative sign, and Bollingers and stochastic over here had a bearish cross, and since then is pointing downwards. So the pressure and the pressure is mainly on the downside. There is an increased bearish move. This is based on my Heiken Ashi. Now let's shift back to the proper Japanese candlestick, the standard Japanese candlesticks, and you can see that indeed, even though there was a sideways movement, holding this first support of the day based on my pivot points, we could see that RSI lacked of moving about 40-45 level. Stochastic, say similar to before, I mean further down, pointing down. So you need to keep an eye on. So here on the upside, you should be on the 2065 level, right? On the downside, a break of the latest swing low, which is basically the 2850 level, could open the doors, as I said earlier, further to the downside to 2830 and even 2800s territory. Okay, so this could trigger some further pressure and could attack further the sellers if the data today disappoint. And by saying disappoint, if the data today disappoint, as I said, and that means that if the data show that inflation will remain hot, will remain high, what that means, it means that the Fed has not done enough, has not done any progress with his actions in order to put inflation down. So that is dollar positive, which is gold negative. Why? Because that will postpone furthermore the rate cuts from the Fed. Okay, so euro dollar for Andrik, because we have just 7 minutes to go until the data. So dear, in general, okay, I'm not going to speak about the overall outlook for euro dollar. In the long term and medium term, European economy is struggling. It has a lot of challenges. Another challenge, other than the fact that the economy is in a recession, another challenge is, of course, Trump tariffs. So in general, the euro dollar is expected for the year to decline further, even reach parity, considering the tariffs uncertainty, the lack of unable basically to support the economy. The ECB is unable to support the economy, but in order to indicate that it could reach parity levels, we need to see the resumption of this downtrend that we have seen since September 2024. The last nearly 4 months in a row, euro has been sideways, right? Supported, rebounded slightly, struggled, however, to move above 105.30 and is moving sideways. Since that, basically it's an ascending triangle. Let me just show you precisely what I mean. So if I connect the lows of since the beginning of the year, that looks like a nice ascending triangle, right? Ascending triangle. So I'm gonna keep this one because it might be a nice support level eventually. So the overall outlook hasn't changed, is neutral currently, but is expected to be neutral to negative, for the year. Now, let's zoom in
into our 1 hour chart, we had a rebound, a support, let's say at the bottom of the triangle, some support the last few hours. However, similar with stocks earlier, the momentum remains negative. We have seen indeed some bullish bias, right? Some support. That's okay. That's another bullish cross, even though the slope is a bit weird, it's a bit flat. But you need to keep an eye on the for the downside. You need to keep an eye on this support area that I just put on in this, let's say, trend line that I put on. And let me just check something. So doji, 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 push, push, push. MACD is a 30 minutes chart. Sorry, I'm sharing the wrong. Where's euro dollar? Here we are. Some support, and I'm gonna use my Japanese candlesticks over here to see what exactly. Yeah, this is the Japanese candlesticks. Okay, so what we are seeing over here, 30 minutes chart, the moving average are pointing further to the upside. So for euro dollar, it seems that there is some further room to the upside. Okay, but let me just measure this latest swing low. Here we are. Come on, here we are. Okay, so the next resistance level are another 10 pips higher, 120, 134, and 1045, 10445, sorry. So there is some room further to the upside, it seems, but in the very, very short time frame. Just sorry for that, just a second. So if the data, as I said, disappoint, provide further indications about inflation that inflation will remain hot or remain higher, this will be dollar positive, and that could pull back euro dollar. But for the time being, at least from the technical perspective, we can see that there is further room to the upside. So I'm wondering whether it will push up before it drifts down in the case of a personal consumption expenditure that will beat expectations. Okay, that will beat expectations. So I don't see any questions. Dollar Swiss for one of the is Swiss and yen were the biggest underperformers this week. Sorry, let me show you Swiss. They sold off on dollar strength. Nice clear trends basically in the safe havens such as Swiss and yen. And thank you for bringing that up, dear Akorede. So where is it? Here we are. That's the rally that we have seen since yesterday. Let me zoom in. Still the latest swing high, the latest ceiling over here at 0.9040 or 0.9050 still holds. However, the fact that parabolic SAR are far away from the price, okay, indicates that there is still further room to the upside. MACD turned positive. RSI had another bullish cross, basically. Let me zoom in. That looks like an inverse head and shoulder formation, which has broken basically over here. Look, inverse head and shoulder, shoulder, head, shoulder. So we could see further room to the upside, guys, over here. So let me measure it. So yeah, okay, nice. Not 90-50, as I said earlier. This is a nice zone to be considered, and halfway between 161 and 261, it's the one, not 90-90, not 91. That's the very next resistance level, if and only if we see the asset extending. Sorry, oops, what have I done? Come on, come on, come on. Sorry, I removed my Haikenashi by mistake. Haikenashi. We are. Don't know how I managed to do that. So the data are out, guys. The data are out. Let me shift back to the gold. There is a muted reaction. Let me check what's going on. Come on. Let me refresh the economic outlook. This is gold in a 15 minutes chart. Okay, so PCE 0.2% contraction in January. Personal income beat expectations. PCE headline, sorry, monthly flat. The yearly basis, basically the headline detacted, but in line with expectations. So that's not so bad. That's not so bad. Basically, the data were in line with expectations. Let me show you the economic calendar. So you see, this is the personal consumption data. So the headline 2.5, as it was expected, slightly below the previous reading. The core one, which is the core one, but the headline core one, flat, in line with expectations, slightly below the previous month, revised higher as well, while the monthly readings presents less spending, which was expected, and actually contraction in the spending and higher income. Okay, so a very flat, I would say, very flat data. That might be the reason why we've seen a bit of not a significant volatility, at least for the time being. Let me just quickly shift to the dollar just to see whether, yeah, muted. Yeah, a bit of a muted reaction. Okay, dollar in the 15 minutes chart is trying to gain some ground. Gold slightly lower. If I put, this is the 5 minutes chart, okay? Can see that it's trying to shift a bit lower, but it's in general quite a muted reaction. This is what I see. I can see from the immediate reaction. I was expecting something like yes, as that the PC could be a potential risk, but it seems that's not the case for the time being. Yeah, so let me, okay, just okay. So PCE. Let me see what's going on. Yeah, so gold slightly lower, muted reaction, debating between bulls and bears, struggled to extend. Basically, they struggled to find a direction. Can you see that? It's just stuck at 2850 territory, went 2854 territory after slipping to more than 2% down since yesterday. I mean, I'm referring to gold, obviously. So, yeah, It seems that the data just now, do you understand what the data show, guys? The fact that they are in line basically show that there is no rush for easing. Basically, they indicate an unchanged US interest rates for the time being. Okay? It seems that the inflation is easing slightly, but easing, which is good news for the Fed, but it doesn't push them to act fast. In contrast, it's just pointing that the Fed will keep cool, basically keep the rates unchanged, on hold. We have next week, we have an FP. Is it the week? Yeah, next week we have an FP. So if we consider the inflation so far, which it was a bit, let's say, steady, so neither good, neither bad. Risks are still there, but at least it didn't get worse. So that means rates unchanged, as I said. But on the flip side, we have jobs next week. We have NFP. So if NFP comes stronger than expected, indicating that the US job market is still strong, this is something that will keep the rates unchanged, not just for the next month, but for a while. So that could push the rate cuts into year's end, November, December. Okay, so it's not a clear sign that inflation is cooling, and especially as long as the job market remains solid, they cannot do anything, basically. They cannot act. So how do I register? Dear, if you want to register with us, please visit our website, www.hfm.com. Okay? So I'm gonna get back to dollar Swiss. I was the one that Acorede asked. Guys, this is your session. Ask anything you want. I'm here to help, okay? So let's return back to dollar Swiss. Hi, this one. Dollar Swiss. What we have over here, a bit of indecision still. Still indecision, but the overall outlook remains, sorry, this is gold. Sorry, my bad. This is dollar Swiss. Let me zoom out a bit. Okay, zoom in 15 minutes chart. This is the 15 minutes chart, my dear friend. Steady, small body candles, small body bullish candles. That's not indicative of a move higher, okay? So for the time being, this looks that there is a lot of pressure. So we might see either further consolidation or a retest of this previous resistance level that now has turned into immediate support. That means a possible return back to 0.90 level. But if we indeed see a red candle over here, a red Heiken Ashi candle, okay? So that could retest this support, which was previously a resistance. But you need to be a bit patient because for the time being, we don't have any clarity. That's the 15 minutes chart, dear Agorede. Overall, however, that's a nice, strong trend in this 4-hour chart. And if today we see a resumption to the upside, so we see the asset extending and moving above 0.9030, 0.9030, that could retest, as I said earlier, the ceiling that we have seen Last week, yes, 0.9040, 0.9050, and even the 0.9090 level, even though that looks to me like a is it a triangle? No, it's an M formation. Yeah, it's just looking like a correction, uh, at least for the time being. Correction before another attempt. Yeah, corrections. So let me measure it as well. So okay, that's for next week. I'm gonna keep an eye on Swiss. So that's homework, my homework for next week, basically. Okay. So for the time being, I don't want to confuse you guys. For the time being, it remains to the upside. In the very short time frame, there was a pullback, and there is a lack of further rebound. So we wait and see. A reversal, a bearish candle over here could retest the 0.9005 level, 0.90 level. Does this data make dollar stronger or just otherwise neutral? It's a bit neutral, at least for the time being. Let me double check whether we have any further data. I think that we don't have any further data today, unless if Mr. Trump. Actually, we have Mr. Trump speech, guys, today. Sorry, my bad. Tonight we have Mr. Trump's speech. Sorry. So yes, this data are not really making the dollar stronger. It's more of a neutral. So something that could push the dollar higher, it will be what it will be followed after the data. So Mr. Trump's speech. So let me just check what time exactly that will be. And that might explain also the fact that we didn't have a strong reaction today, a strong reaction in the data. Yeah, we didn't actually. So that might be the reason. So over here, you see this big candle. Let me just. This is the dollar, okay? Can you see this big candle yesterday at 3 o'clock? Do you remember what was that? So basically, yesterday, that big candle, that big candle that we had, it was during Mr. Trump's speech, along with the pending home sales. But it was mainly Mr. Trump's speech because he spoke yesterday as well, confirming once again that yes, the tariffs for Canada and Mexico will still hold for 4th of March, effective from 4th of March. So today, let me just check, Friday 28th. What time is he speaking today? I think they have the meeting with Zelensky, but let me double check, guys. I think it's the meeting with Zelensky, and that's something that it might be the reason why the dollar remains on hold. You see, we have seen some rebound, but just tiny one. That's a 30 minutes chart. So now I'm down to the 5 minutes chart. But yeah, there might be the the Trump's meeting with Zelensky, but also Zelensky, and basically it's a very crucial meeting because today, by the way, ignore this is a 5 minutes chart on dollar, okay? 5 minutes chart on dollar. You can do that though, it's for scalping or something, but you see, there's not a clear direction. Look at that. Down, up into this double top, down, up again, failed to breach the 107.26. And now we have a new session. Let's see, but that's a neutral dollar DR for the time being, because they weren't neither bad, neither good. Basically, definitely not good because they were in line with expectations, indicating that the risk is still on the backside. The risk is still there. This is a 5-minute chart, as I mentioned. So dollar, yeah, this is it, 1 hour chart. So as I was saying, why steady? It might be the Trump's meeting, the Trump to Congress, basically, the meeting with Zelensky. Why? Because I don't know whether you heard it, but it seems that the US wants access to Ukraine's natural resources. It's natural metals, it's natural resources, energy resources, and etc. So very, very critical minerals deal ahead of us. So very important to see what will happen today, even though they might not show anything tonight, but yeah, considering the potential peace deal, considering the potential shutdown of the government in 2 weeks because of lack of budget, basically, as usual, and the tariffs on Canada and Mexico, which will kick in on the 4th of March. That's something that might hold the markets steady in this very, very last trading day of the month, end of the week. So that's why it's not so exciting, let's say. But there are some interesting technicals for sure. At least things that you need to keep an eye on and to get prepared for the new week. Also, let me check. Let me double check what else is going on that I might have missed. Let me check the Bloomberg TV as well. Okay. Yeah, everyone is pointing that spending has fallen and the Fed inflation rises, but in a mild pace. So I'm not going to repeat that. So let me just check out of curiosity gold. Oops. Gold as well, 1 hour chart. Yeah. Steady. Momentum is on the downside. So yeah. So the outlook remains negative for the week. That's gold. But as I said earlier, keep an eye on the latest swing low. A break off this latest swing low, 2850, could open the doors further to the downside. Yeah, momentum indicators are still pointing to further decline into US open. Okay. What else is going on over here? Sorry. The US Open has opened already. Sorry, my bad. So what else is going on over here? You should be prepared, guys, for tonight's meeting with Zelensky, Trump and Zelensky, okay? It's something that could shake the markets, especially because it could affect the commodity currencies, the commodity assets, gold, platinum, palladium, oil. So it's not just a diplomatic meeting, it's not just a political meeting. It is expected to have major implications for markets such as defense stocks, energy, commodities, and in general, global. There is expected to be a global risk sentiment in place. So he's really pushing. Trump is really pushing for a quick resolution, and he wants access in Ukraine minerals, as I said, in Ukraine's natural resources. So that sparks geopolitical uncertainty. And what uncertainty, especially geopolitical ones, how it affects the market? It affects the oil, it affects the stocks, it affects the bonds, it affects the commodities. Okay, so this is usually something that is negative for oil as well. So depends on their comments, but yeah, it could a peace deal. Okay, can you follow? Are you okay? Can you follow? A peace deal. When is Trump meeting? Tonight. It's 8 o'clock. Let me just 8 o'clock server time. I cannot find the precise time, but it's today. It's today. Yes, let me check. Okay, according to the calendar. Okay, dear. According to the calendar, is at 8 o'clock server's time. Oh, let's wait and see. I cannot really find out right now the precise time, but yes, it's definitely tonight. So, as I was saying, why you need to be aware of this meeting and how it could affect the markets. Basically, a peace deal, okay, it could add pressure on defense stocks, okay, defense stocks. It could also suggest that US can reduce the military in Ukraine. So what that means for the US economy, it means less expenses. Okay, so this could keep gold, let's say, it could keep gold and bonds in demand. Why? Because a ceasefire without, let's say, strong the safety of US, without security, guarantee security from the US, it could indeed means less spending for the US economy, but on the flip side, it could increase the long-term uncertainty. And that's why we could see gold and bonds in demand. That's if we have a really rushed, let's say, peace deal. Now, yeah, on the flip side, there's a lot of uncertainties, I will say, but something that could, let's say, adds further to the safe haven demand, basically to something that could support gold and safe haven assets. It will be if Ukraine, or if Ukraine reject the deal, or if US and Russia don't really delay, let's say, a deal, they don't really they don't agree, so this deal might delay. So all this uncertainty is definitely something that adds to support to the safe haven such as gold, and could pressure though, listen me, it could pressure though oil. Okay, so there are a lot of there is a lot of unclarity, lack of clarity for the markets, basically due to the geopolitics, because we don't know whether it will be a rushed peace deal, whether Ukraine will agree or not, whether US will lift sanctions to Russia. Because if they lift sanctions to Russia, that means cheaper oil. We don't know whether uh, they will reach to a deal soon. If it's not a clear deal, that could also support gold and bonds. So there are plenty of uncertainties that I don't want to waste your time. So keep an eye on the news, okay? Keep an eye on all these uncertainties, but also rely on your technicals, especially because it's a market that is extremely uncertain right now due to Mr. Trump, due to the Ukraine, due to Russia, due to the tariffs. So the market sentiment is risk on, risk off, risk on, risk off. So that's why you need to rely on your technicals as well, on support levels, on resistance levels, on breakouts. So rely on your technicals. Yeah. So that would be an interesting video to be presented by myself and Michalis, the implementation, the impact of peace deal to the market. So something that we need to do. Just pop out those data make can you check dollar Nasdaq basically Dow Jones, sorry, yes. This is gold, dear Steve, steady 1 hour chart, steady, still holds this 2850 level. We need a decisive break of 2850, a decisive one, in order to indicate that there is further room to the downside to 2830. Sorry, let me show you 2830 and even to 2800. So we need a break, decisive break of 2850 level. Yeah, so guys, these are the levels that I put on as immediate support levels after the breakout of my ascending triangle. So this rectangle that you can see is actually, I measured the base of the triangle. Okay, the base, that should be more precise one. Yeah, top to bottom of the triangle. And yeah, I shifted it and I put it on the and I put it over here just to find the next support level. Okay, is the base of my triangle over here, and I shifted it here to find the next support level. The other assets, such as 2800, 2790, are based on my latest swing highs. Look at that. Latest swing high, latest swing highs. So these are the next immediate support levels in the medium term. Intraday now, use your Fibonacci extension, use your ATR, why not? But we need to see a break of 2850 in order to suggest further dip to the downside to 2840, 2830 area, and so on and so forth. For the time being, 2850 still holds. Check Dow. Dow. My Dow. I saw it earlier. Here it is. Yeah. Okay. That's another triangle that I put in place like beginning of February. It was broken last week, as you can see. It was broken last week. I did the same thing. I measured the base of the triangle. Okay, and okay, back then it was over here. It was yeah, mid of February. I put it here. It's suggesting that if the triangle breaks, the next support level is at 42,830. However, the break it delayed a bit, and the break has been seen last week on the 20th on the 44,400 territory. So as you can see, it already breached the bottom of my measurement of my rectangle. Okay, So that was already done, I'm afraid. But if I zoom out just to see where the Dow stands, let me just, it's overextended, by the way. Bollinger's expanding lower, so it's a negative outlook in the medium term. MACD turned negative. RSI is below 40, but check something. No, ignore. So the asset has already reverted 60% of the gains that we have seen in January. And it seems that the next support level is at 42,830 and at the 42,330. Okay, which is really, really close without 200 moving average. So we need to keep an eye on it. Let me zoom in into the 4-hour chart. So, and possibly remove some of these indicators because it's getting too messy. This is the, I'm going to put the exponential one. I'm going to use the exponential one as well. So here, and I'm going to use the 20 as well. So what we have, bearish cross, keep expanding. So there might be sideways this week, I mean Dow Jones, but the outlook remains negative. So there is some divergence sign, dear Garfield. Look at that. MACD is rising, but at the same time, the price, it's like lower. So there is a diversification over here, a quite important one, something to keep an eye on ahead of the new week. Okay, I'm gonna get rid of that and that, but very interesting. It's a diversification sign in the 4-hour chart. Now I'm gonna shift down to the 30 minutes chart, that just to see where we're standing. So in the very, very short time frame, stochastic is turning lower, MACD is positive, RSI is pointing lower. So it seems that there is a time for a pullback. This is what it is. Yeah, a breach top, doji candle at the ceiling, reversing right now, stochastic pointing down, RSI they're the same, so we might see a pullback in this very, very short time frame. Just so next support around 40 points lower, ticks lower, so 43,405. Yeah. Yeah, so that's pretty much it. So intraday, there are some signs of a pullback, a diversification sign in the 4-hour chart. So let's wait and see. Support holds are 43,155. Resistance at the 50 period moving average, which is at 43,700, 850. Overall, it looks like an M formation, I think. Not quite, can't quite tell yet. But yeah, it's halfway, isn't it? Is it halfway of this latest up leg? So yeah, food for thought over the weekend. Guys, I'm nearly to the end of the live. So if there are no questions, I'm going to call it a day. I'm going to scan a bit to see whether we have any news from the US so far, even though it's quite early. Bitcoin remains on the downside. There are some short-lived rebounds, just short-lived ones though. So lower highs, lower lows. So remains under pressure. Big sell-off. Next support at $70,000 for cryptos. So yeah, let me check whether we have any further news. Nothing really. Advanced good trade balance tumbles. Trade deficit tumbles. No, there's nothing new. Dollar remains steady. Bitcoin remains on the downside. Gold remains on the downside as well. Just broken, by the way, gold just broken my 2850 level. So what else? Dollar Swiss should benefit, yeah. So started to extend gains. Not 90.30 is the next ceiling. This immediate swing low high, sorry. S&P remains unchanged. Dow remains unchanged for the time being. Yeah, that's pretty much it, guys. If there are no questions, I'm going to call it a date. So muted data, muted reaction, flat data, muted reaction. Trump and Zelensky meeting later on. That's the attention. It's over there, basically, to have any hints regarding a ceasefire, a deal, an agreement, and etc. A rushed one, not a rushed one, and so on and so forth. So politics are in play the whole year so far. The whole year. It has been last year as well, but with Trump in the presidency, it's like we were gonna be in a roller coaster for the whole year. So, guys, I'm gonna call it a date. Thank you very much for attending. Have a great weekend ahead. Take care, and we're gonna see you again next week. Thank you very much. Bye bye.